Hello students, welcome to Spardhaline. We are continuing with our series that is Complete Indian Polity through the MCQ, and today it's third part. Totally it's 15th and third part of the Indian Parliament. Previously in two parts I have covered the Indian Parliament, the major constitutional bodies related to Parliament, then the other offices. So in today's session we are starting the third part, and here mostly we are going to see the budget and the passage of bills. So without wasting time, we'll start. So the first question here it is, consider following statement regarding legislative procedure, the legislative procedure in the Indian Parliament. First statement says that legislative procedure is identical in both houses of the Parliament. Second statement, the Constitution has laid down separate procedure for the enactment of all categories of the bill. Okay, let me know which one is the correct here. Choose the correct option. Okay, so we'll see which one is the correct here. So basically both statements are correct because the legislative procedure in the is identical in both houses of Parliament. Because consider if Parliament wants to pass one ordinary bill, so it need to go with the same process, either it is Lok Sabha or the Rajya Sabha. So if it is introduced in Lok Sabha, okay, in case it is introduced in Rajya Sabha, it need to have the same kind of majority. If the bills, or mostly ordinary bills, will be passed with a simple majority, so same kind of majority need in both houses. Okay, then same kind of procedure that we follow here. If they want to send it to committee stage, committee, this committee, it can be joint of, or it can be a house committee. Okay, within the house they can send. Okay, and then it is transferred to the here, or if it's in Rajya Sabha, it will be transferred to the Lok Sabha. Again it will follow the same procedure. Okay, it's not with the ordinary bill, other types of bill. Okay, take it finance bill, or not finance bill, but a constitutional amendment bill. Okay, in the both cases the legislative procedure will be same. When it comes to the finance bill 1 and 2, that 2 and 3, that time the procedure will be same. But when it comes to finance bill 1, that is nothing but money bill, that time procedure will change. But that is an exception. So remember, legislative procedure is identical in both houses of Parliament. Okay. Second statement: the Constitution has laid down the separate procedure for the enactment of all categories of bills. Yes, because if you see the ordinary bill, we have seen the procedure. Then when it comes to money bill, there is separate procedure. Okay, there are the certain criteria that we'll see through the MCQs only. I will not spoil here. Then we have the constitutional amendment bill. So there also this Parliament or the Constitution has laid down separate procedure that we have seen in previous sessions. So those who are not watched, they can go and watch. Then again comes the finance bills. So okay, two types of finance bills will be there. So these two bills will be passed with the different procedures. Okay, that also will see the through the MCQ. So these two types will cover it here in today's session. This already covered in previous sessions. Okay, so the basically the both statements are correct. So correct answer is C, that 1 and 2 are correct here. Okay, we'll move towards the next question now. So this statement says that the consider following statement with passage of ordinary bill in the Parliament. So it is talking about ordinary bill. So what is asking, which of the following is the correct chronological sequence? They are asking chronological sequence. Okay, so let me know which one is which comes first and which come last. So the first is a publication in the Gazette of India, then detailed scrutiny of the bill by the committee and giving it final shape, then acceptance or rejection of the bill as a whole, then consideration of bill in the second house, and last is the assent of the president. Okay, let me know which one is the correct here. Okay, we'll see. So many of you would have confused with this statement, the present in publication in Gazette of India. Okay, the Gazette of India, here they will publish first time. Okay, after assent of president, they will publish it in a statute book. Statute book. Okay, this is the last stage. But Gazette of India, when the bill will be introduced in the house, that time itself it will be published in the Gazette of India. And when they publish in Gazette of India, it will be open for the public scrutiny, or people can go through the bill. Okay, it's not like after only introducing the bill they need to publish it in Gazette of India. Even before introduction, they can publish it in the Gazette of India, but that time they need to take the permission of the speaker if bill is coming in Lok Sabha or originating in Lok Sabha. In case it is originating in Raj Sabha, they need to take the permission of the chairman of the house, chairman of the Rajya Sabha. So that's why the publication of bill in Gazette of India is the first stage. Second, detailed scrutiny of the bill by the committee and giving its final shape. Yes, this is the second stage involves, because after introduction, the house will decide whether to go with the bill or it need to refer to the committee. So when it comes to the committee, there are two select committee. So when come to select committee, it will be referred to the joint committee. Okay, the committee constituting both houses. So that is, we'll see when we'll see the parliamentary committee. So the rough idea, it will be when they might refer to the committee in that house, or they might refer to the joint committee. Okay, so this is second step. Then again, when it comes to committee stage, there are the different procedure. Okay, so the bill, the committee can go with detailed scrutiny of the bill. Okay, they can skip the contradictory clauses, but without changing the spirit of the bill. Okay, they can amend the provisions, but the ultimate, whatever the spirit, in the what spirit that particular bill introduced in Lok Sabha or Raj Sabha, that should not be changed. So that is the only condition. Then, so this committee stage, it gives the bill the get final shape. So this statement is correct. So this is the first stage. This is the second stage. Now the third, acceptance or rejection of bill as a whole. Okay, after scrutiny by the committee, the bill again put into parliament, the house. So that time the house will decide whether to go with bill or reject the bill. So this is the third stage. Third stage. Then after the, if one house decided, okay, to accept the bill, then it will be transferred to the next house, other house. So that time it becomes the fourth stage. And finally, this is the fifth stage, that assent of the president. And if would have been there, this would be sixth stage, the publication in the statute book of the India. So the correct chronology, all already put in chronological order. So correct answer is the A. 1, 2, 3, 4, 5 are the correct here. Okay. So we'll move towards the next question. This is again, it is regarding the money bill. So statement says that the Constitution of the India gives the detailed definition of the money bill and specifies the matters that falls under it. Then the Constitution prescribes the special procedure for the passage of money bill in the Parliament. Okay, let me know which one is the correct here. Okay. So first statement says the Constitution of India gives the detailed definition of the money bill and specifies the matter that falls under it. Yes, the Constitution of India under Article 110. Okay, it has given the detail this definition of the money bill. It has laid down certain conditions when after fulfilling that condition the bill will be considered as a money bill. So it deals, the Article 110 deals with it. Okay. Second statement, the Constitution prescribes special procedure for the passage of the money bill in Parliament. Yes, there is a special procedure. What special procedure? We know the bill, the money bill. Okay, when it comes to money bill, this money bill must be introduced. When it comes to introduction, there must be recommendation of president. So president must recommend to introduce money bill. So that is the one condition. Second, it must be introduced in Lok Sabha. So it must be introduced in Lok Sabha. Third condition, it must be introduced by the minister. Okay, private member cannot introduce money bill. So these are the three conditions when it comes to the money bill introduction stage. Then second stage, okay, after introduction in Lok Sabha, only Lok Sabha has power to amend the bill. Okay, Raj Sabha, when goes to Raj Sabha, it cannot amend. Okay, so it cannot amend or it cannot reject the bill. It cannot reject also. It cannot amend and cannot reject also. But Raj Sabha can give the recommendations. This recommendation goes to the Lok Sabha, and this recommendation they need to give within the 14 days. So if Raj Sabha not returns the bill with or without recommendation within the 14 days, then Lok Sabha can go forward with the bill that introduced in Lok Sabha, or the bill that take the final shape in the Lok Sabha. So that will be given to the assent of president. So then comes the assent of president. When it comes to assent of president, he has only two options. So either he can give his assent, okay, or he can send the bill for the reconsideration of reconsideration. Sorry, it's some. Sorry, okay. So he can give the assent or he can only withhold the assent. He can give the assent, and he president comes to president assent. He can give the assent or he can withhold the assent, but he cannot return for reconsideration of parliament. So this is the not applies when it comes to presidential assent. So that is why the special procedure that is introduced by the constitution. So second statement also correct here. So correct option is here. See that both 1 and 2 are correct here. Then next question. So again, now there are the certain conditions. So it asking consider following statement regarding money bill. So it is asking how many of the statements given above are correct. So which of the these statement, okay, which are the condition the money bill need to fulfill? First is the money bill can be introduced only in the Lok Sabha. Just I told yes. Then it should be introduced only by the recommendation of president. Yes, just I told. Then money bill can be introduced only by the minister. Yes, correct only. Just I told. Then Speaker of the Lok Sabha has final authority to decide whether the bill is money bill or not. Yes, Speaker has the final authority. That I forgot to discuss. But Speaker has the final authority. Then Raj Sabha cannot amend, cannot reject, but it can may recommend changes in that. Yes, it can recommend the changes, but it cannot reject or amend. Then the president cannot return the money bill for the reconsideration. Yes, this is also correct. He can give his assent or withhold assent, but usually he will not withhold, he will give his assent, because ultimately the bill will be introduced after his recommendations. Okay, so whatever the changes he wants in that bill, he will tell in that stage only. So in usual cases he will give his assent. Okay, so the all six are correct here. These all conditions are fulfilled by the money bill. Okay, or the bill need to fulfill these all conditions to become as a money bill. The next question, here are the consider following matters. Okay, how many above the matters can be included in the money bill under the article 110 of the constitution? So these are the conditions that certain bill need to fulfill to become a money bill. So which are the correct? So first is the imposition, abolition and remission, alteration, regulation of any tax, then appropriation of money out of consolidated fund of India, then regulation of borrowing of money by the union government, then imposition of fines or other pecuniary penalties. So which of the these out of four, the condition the bill must fulfill to become the money bill under Article 110. So let me know which one is the correct here. Okay, so we know first three are correct when it comes to fines or fees. Okay, that time the bill will not be considered as a money bill. It will be considered money bill only when it deals with the imposition, abolition of regulation, tax, any tax, and these taxes imposed by the only union government. So it is dealing with the imposition, abolition, remission, alteration, regulation of taxes of the union government. Then only it will be considered as a money bill. If the bill is talking about imposition, abolition, alteration, regulation of taxes that imposed by the local bodies and for the local purpose, then this bill will not be called as a money bill. So this is the one catch here, that when it will be called money bill when it deals with the imposition, remission, alteration, regulation of the union taxes of the union government only, but not with the taxes of the local bodies. Okay, so this is the one catch here that you need to understand. Fourth statement now wrong. First three are the correct, so correct answer is here A, that 1, 2, 3 are correct here only. Next we'll move towards the next question. So it is about the regarding bill. Okay, we consider following statement regarding bill in the Indian Parliament. So it is given some description and it is asking you to decide which is the bill here. Okay, so it says that first it is the bill that contains a borrowing clause and does not exclusively deals with borrowing. Then it can be introduced only in the Lok Sabha and only on the recommendation of the president. Then the Raj Sabha cannot amend the provision relating to reduction, abolition of the tax. Then president can summon joint sitting of the both houses to resolve deadlock on this bill. Okay. Third, fifth statement, the president may give assent, without assent, or return a bill for the reconsideration. So after this description, what do you think? Which is the bill that question is describing? Let me know. Okay, we'll see. It's a first statement. It is bill that contains the borrowing clause, but does not exclusively deals with the borrowing. Okay, when we see the comes to the money bill is one type of the finance bill, but not all the finance bills are money bill. Okay, so there are the certain classification. When it comes to the finance bill, there are the three types. So first is a money bill, second is the finance bill one, then third is the finance bill 2. Okay, so when it consider money bill, it strictly deals with the borrowing clause. Okay, imposition, remission, alteration, regulation of the tax, that time it will be considered as a money bill, or other conditions that given in the constitution, that time it will be considered as a money bill. But it is not exclusively borrowing it, not exclusively deals with the borrowing, so that time it will be not money bill. So the one option that we can eliminate, it is not a money bill. Okay, second, it can be introduced only in Lok Sabha and only on the recommendation of president. Okay, so after looking that, when it comes to ordinary bill, it can be introduced either in Raj Sabha or the Lok Sabha, and there is no need of recommendation of president. So the after seeing the second statement, you can eliminate the third one, fourth also. It is not ordinary bill. Now need to decide between whether it is finance bill 1 or finance bill 2. Okay, next statement, third statement, if you see, Raj Sabha can amend the provision relating to reduction, abolition of the tax. Raj Sabha cannot. Okay, so this is okay. So this can be still it can be finance bill 1 or finance bill 2. Next statement, fourth one, the president can summon joint sitting of both houses to resolve deadlock on this bill. Yes, this can be finance bill 1 or finance bill 2. Next, the president can give his assent withhold his assent or return the bill for the reconsideration. Yes, this also can be done when it comes to the finance bill 1 or finance bill 2. So there is only one catch here. The Raj Sabha cannot amend the provision of reduction, abolition of tax. Okay, so this particular applies to the finance bill 1 only. because in Finance Bill 2, Rajya Sabha can consider amend the provisions, but only after reconsider the recommendation of the president. So after seeing the third statement, we can say that it is a Finance Bill 1, not a Finance Bill 2. Okay, so why it is different from the Finance Bill 2, that we'll see from the next question. So see, now there are condition given regarding to Finance Bill 2. So you will understand what is the difference between Finance Bill 1 and Finance Bill 2. So first argument says that such bill contains financial provision involving expenditure from the Consolidated Fund of India, but does not include any matter listed under Article 110. Then such a bill can be introduced in either House of Parliament on the recommendation of the President, is not required for the introduction. Third, such a bill cannot be passed by the either house unless the President has recommended the consideration of the bill. Fourth one, such a bill, when it is presented to President, she or he may give assent, withhold assent, or such a bill or return for the reconsideration. So now see, second statement. First statement is saying that such a bill contains financial provision involving expenditure from the Consolidated Fund of India, but does not include any matter deals that matter related to Article 110. Now, when it comes to the what we are saying difference between Finance Bill 1 and Finance Bill 2. Now, when it comes to Finance Bill 1 and Finance Bill 2, Finance Bill 1, what happens? It includes matter that listed in 110. So it deals with the money bill, also certain provisions of money bill. With the provisions of money bill, it can also include the other clauses, non-borrowing clauses. Okay, so that time it becomes Finance Bill 1. But when it comes to Finance Bill 2, it cannot or it not includes any provision that mentioned in Article 110. Means it will not deals with the money bill, or it will not involve certain that provisions related to money bill. So that time it is considered a Finance Bill 2. Okay. Second difference, such a bill can be introduced either House of Parliament, but when it comes to Finance Bill 1, it must be introduced in Lok Sabha, then it must be introduced by minister, and it must be introduced after recommendation of the President. So these are the must condition. These are the must condition to introduce Finance Bill 1. But when it comes to Finance Bill 2, it can be introduced either in Lok Sabha or Rajya Sabha. There is no need of recommendation of the President. President recommendation is not necessary. Okay, and also recommendation this particular it is not, but there is one provision that it must be introduced by the minister. The must condition is it must be introduced by the minister or private members. So these are the conditions when it comes to the Finance Bill 2. Okay, then third condition, such a bill cannot be passed by either house unless President recommended consideration of bill. Okay, so when it comes to the Finance Bill 2, the recommendation of President, it is not necessary in introductory stage, but when it comes to the consideration of bill, the house consideration of bill in any house. At this stage, we need must recommendation. Okay, we need recommendation of President, and this condition is a must. Okay, so that time it bills become the Finance Bill 2. Then last one, such a bill when presented to President, the President has the three options. Okay, so both said here and there, the President has the three options. He can give, he can withhold assent, or she can return the bill for reconsideration. So these all three assent the options that applies for the Finance Bill 1, Finance Bill 2. But what makes difference Finance Bill 1 and Finance Bill 2? That is these two conditions and the first one. So the Finance Bill 1, it includes the matter that mentioned in Article 110. Finance Bill 2, it not includes. Second condition, it must be introduced in Lok Sabha, that to do by minister and only after recommendation of President. But it is not necessary for Finance Bill 2. When it comes to the consideration of the bill, that time recommendation of presidents are necessary when it comes to the Finance Bill 2, but it is not necessary in the Finance Bill 1. And other parts are same. President can give all three assents. Okay, all three assent give, he can give assent, he can without assent, or he she can return the bill for reconsideration. Apart from this, president can summon the joint sitting. The joint sitting of two houses. Joint sitting of two houses for the finance bill 1 and finance bill 2 as well. Okay, so these conditions are, the bill must fulfill this condition to become the finance bill 1 or finance bill 2. Okay, but when it comes to money bill, president has only two options: to give assent, withhold assent, and he cannot summon the joint sitting. So when it comes to money bill, these two condition not applies, but this condition applies. But exclude only one that first one, that it must strictly deals with the provision mentioned in article 110. It should not deal with the other provisions, so that time it becomes a money bill. So there is a difference when it comes to the money bill, finance bill 1, finance bill 2. Okay, then after this we move towards our next question. So it is about the joint sitting of the both houses. So when it comes to joint sitting, can be summoned only for the ordinary bills, finance bills, but not money bill or the constitutional amendment bill. Okay. Then once president notifies the joint sitting, neither house can proceed further with the bill separately. Then if the bill has lapsed due to dissolution of the Lok Sabha, the joint sitting cannot be convened for that bill. Okay. Now let me know which one is the correct here. Okay. When it comes to the joint sitting, this joint sitting is mentioned in Article 108. The 108 article mentions the joint sitting of the both houses, and when this joint sitting can be conveyed, it is conveyed in extraordinary circumstances. And what are these extraordinary circumstances? First, the other house, okay, the other house disagrees with bill, or other house that disagrees with the amendment to the bill, amendment to the ordinary bill. Okay, it is either it to disagree with bill or amendment to the any act. Okay, so that time it this considered extraordinary circumstances, and this disagreement extend for the 6 months. Okay, even after 6 months, the both houses not comes to the consensus, that time president can summon the joint sitting, and this can be done after advice of the council of minister. So the president can summon joint sitting under article 108. Okay, and this under joint sitting can be summoned for the only ordinary bill and the finance bill, that we have seen the finance bills. Okay, two types of finance bills are there: finance bill 1 and finance bill 2. So for these two finance bill, there can be joint sitting, but this cannot be done for the money bill or the constitutional amendment bill. These two bills, when it comes to money bill, Rajya Sabha has nearly no role there. So ultimately the will of the Lok Sabha prevails, and when the constitutional amendment bill, constitution has given separate procedure that bill must be passed in the both houses separately. That constitution laid down this condition. So this first statement is correct, that the joint sitting can be summoned for the only ordinary bill and the finance bill, but not for the money bill and constitutional amendment bill. Then once a president notifies the joint sitting, neither house can proceed further with this bill separately. Yes, when president summons the joint sitting, because ultimately they have the disagreement. Okay, they are not able to come to consensus, so they cannot proceed. So there is a constitutional obligation that they should not proceed. Okay, because ultimately there would be joint sitting of the two houses to decide on the that bill. Okay. Then last one, a bill has lapsed due to dissolution of Lok Sabha, joint sitting cannot be convened. This is the wrong. Yesterday we have seen the when the bill lapse, if the president has summoned the joint sitting, okay, and then this Lok Sabha get dissolved, so that time the joint sitting can be held. When the new Lok Sabha comes, that time joint sitting can be held. So third statement is wrong. Correct option is here A. 1 and 2 are correct here. Okay. Then next, there is one assertion reasoning question. Statement 1 says that President of Rajya Sabha does not preside over the joint sitting of the Parliament. Then statement 2, only person who is the member of the either house of Parliament can preside over joint sitting. It is quite tricky question, but let me know which one is the correct here. Okay, so when it comes to this particular joint sitting, the chairman of Rajya Sabha does not preside over the joint sitting of Parliament. Yes, he cannot preside. This is the correct. Constitution has laid down the condition. Then only a person who is the member of either house of Parliament can preside. This is also correct, because if you see who will be preside, who will be the first person have the right to preside over joint sitting, that is the Speaker of Lok Sabha. Speaker of Lok Sabha. If Speaker of Lok Sabha is not there, then who will preside? The Deputy Speaker who of Lok Sabha. Then if Deputy Speaker is also not there, then who will preside? It will be Deputy Chairman of Rajya Sabha. If all these three persons are not present, then who will preside? The person elected by the person elected in meeting or the sitting. So the people, the members from the both houses, they will elect one person to preside over this joint sitting. But in any case, the chairman of the Rajya Sabha will not get chance to preside. So what it means? Only the person who is the member of either house of Parliament can preside over joint sitting. So the both statements are correct, and the second statement explains the first one, because the person who is the member of that either house, he or she only can preside over joint sitting. So correct answer is A, that 1 and 2 are correct, and 2 is correct explanation. Okay. Now when it comes to joint sitting, there are certain conditions that we know when it comes to the procedure, regulating procedure of joint sitting. It will be regulated with the procedure of the Lok Sabha. Okay, not Rajya Sabha. So this is the one condition. Then again, this joint sitting, we have seen the condition when the president can summon joint sitting. Until now, there are the only 3 times this joint sitting has been summoned. So first time it is summoned in 1960. So that time Dowry Prohibition Act. So for that they summoned. Then 1977 the Banking Service Commission Act. Okay, so the commission bill was there. So that time they that summoned this joint sitting. Then latest summoned is in 2002 to Terrorism Related Act. Okay, Prevention of Terrorism Bill in 2002. That time they summoned the joint sitting. So only 3 times the joint sitting has been summoned. Okay, so this is the conditions here. And also one part remained, that when it comes to the quorum, of the house, there should be again 1/10, and the 1/10 of addition of the members of both houses, number of both houses. So consider the Lok Sabha currently has the 543 plus Rajya Sabha 245. So what will become here? So 788. So 1/10 of this. So it is 79. So there should be 79 people. Okay, 79 people must be present to start the proceeding in the joint sitting. So this is the condition, one of the condition. Then this is all about the joint sitting. Then we'll move towards the next question. It is about the union budget. So it says that consider following statement regarding union budget. So the term budget has been explicitly mentioned in the Constitution under Article 112. The Constitution has defined the relative power of the both houses of Parliament in the process of the passing the bill. Then third statement, the Constitution mandates that the budget must distinguish expenditure on the revenue account and from the other expenditure. So let me know which one is the correct here. All this talking about the, it is claiming that Constitution has laid down these conditions. Okay, when it comes to this term, we know 112, Article 112, it is about the union budget, but it is not mentioned the term budget, it mentions the term annual financial statement. So Constitution uses this term, not a budget. Okay, so this is the one thing you need to remember. Then Constitution defines the relative power of both houses of Parliament in the procedure of passing the budget. Yes, because there are certain conditions that demand for grants cannot be voted in the Raj Sabha. It can be only voted by the Lok Sabha, and then the finance bill is also treated as a money bill, so it also can be voted in the Lok Sabha, not to in Raj Sabha. So these are the certain relative power that the major power given to the Lok Sabha when it comes to the passing of the budget, and this is all laid down in Constitution. So this statement is also correct. Then Constitution mandates that the budget must be distinguished expenditure on revenue account or the other expenditure. Yes. Okay, revenue accounts and the other expenditure must be distinguished. So this is the one condition. That's why they show revenue account separately and the capital account separately. So the correct option is here D. 1, 2, 3, all are correct here. The next question. So there are the important constitutional provisions that mentioned in the Constitution itself. So we'll see the some is important one. So important constitutional provision first says that the President shall lay the annual financial statement before the both houses every year. Okay, President shall lay down means there will be President shall call the Council of Ministers to lay down the annual financial statement. So the on the behalf of President who will lay down, it is most of the time it will be laid down by the Finance Minister. So there was a question last year asked UPSC. It told that it is the Prime Minister. Okay, I don't know the logic, means I discussed with many people. I'm not able to understand the logic behind it, but visually it is accepted that the on behalf of President they will introduce the annual financial statement. Okay, the next, no demand for grant shall be made except on the recommendation of the President. Okay, this is the condition that need to fulfill. No demand for grants shall be made except on the recommendation of the President. So this is the condition and introduced in Article 113. Then no money can be withdrawn from the Consolidated Fund of India except under the appropriation made by the law. So there must be appropriation bill to spend money from the Consolidated Fund of India. It is laid down in Article 114. Then no money bill. Okay, there should not be any money bill imposing tax shall be introduced in Parliament except on the recommendation of the President. Okay, this 117 article. So that was I was discussing. All the money bills must be introduced after recommendation of the President. Then no tax shall be levied or collected except the authority by the law. So this introduced in Article 265, where the authorized person or authorized office must collect, levy and collect the taxes. There is no other person. If the by law or the Constitution has given all the power to levy and collect taxes to the state government, then these taxes must be collected or levied by the state government. Union government and local government, they cannot proceed with it. So this is the condition here, that authority must do these things. Okay, then Parliament can reduce, they can abolish tax but cannot increase. So this is very important. Parliament can reduce tax, abolish tax, but they cannot increase it. If the government has introduced bill to impose 10% tax on the now currently 40% tax on the tobacco and other demerit goods. So the parliament can they can make it 30, they can make it 35, or they can abolish, they can say there will be no tax, but they cannot say that let's make it to 100. Okay, they cannot increase it, but they can abolish or reduce. So this is an important condition. Then the budget must separated to show charged expenditure and the voted expenditures from the consolidated fund of India. When it comes to consolidated fund of India, there are two types of expenditure. One is charged expenditure and one is voted expenditure. When it comes to charged expenditure, these are mostly associated with constitutional offices. So salary allowances of speaker, deputy speaker, okay, expenditure of the this UPSC, again the Supreme Court, the salary allowance and pension of the Supreme Court judges. Okay, so these all are called a charge expenditure, though, so you cannot vote on that, so it is called charge expenditure. Then voted expenditure means these expenditure can be voted. Okay, one example is salary of the members of parliament. These are the voted expenditure. So if the government introduced bill to increase the salary, then there can be vote. Okay, the members of parliament can vote in favor, or they can disapprove it. But when it comes to the charged expenditure, when it comes to government introduced bill to increase the salary of the Supreme Court judge, their pension, that time it cannot be voted, because these are the charged expenditure. Okay, so this is the important thing. Then the expenditure charged on consolidated fund of India shall not be submitted to the vote of parliament. This is what I was telling. These are the expenditure, these are charged. Okay, salary, allowance, pension of the Supreme Court judge, one is the example. Okay, then no amendment to the appropriation bill may alter the amount of destination of voted grant or the change charged expenditure. Okay, so there cannot be amendment to this appropriation bill which leads to alter the amount or destination of voted grants. Means what? If appropriation bill is told that the 40% demerit tax that we are imposing on the tobacco and other demerit goods, it need to go to the state as a cess or the compensation for the whatever their loss has incurred after the bringing the GST. So what they are telling, they are altering. They have fixed the amount and also destiny. Means amount what? 40% tax, and the destiny means who will get that. So when it comes to this appropriation bill, the parliament cannot alter the amount. They cannot say that let's it make 50%. They cannot do that, or they cannot change the destiny. Means they cannot say that okay, we'll put the 50% and half will go to union, half will go to the state. So they cannot do that. So destiny and the amount will be fixed by the appropriation bill, and that will not be subjected to any changes through the amendments. So this is important. This is mentioned in Article 114. Then last one, the Lok Sabha. Last one, 10th one, the Lok Sabha may grant vote on account to meet essential expenditure pending completion of the project procedure. 116. So this was used to do when suppose if you know about the shutdown in USA. So what happened during shutdown, USA shutdown? So for the next financial year, their financial starts with the 1st of November. So before 1st of November, they must pass the budget. So it is not passed. So that time the major services that went under the shutdown. So this is same condition applies to us only. So our financial starts from the 1st April to 30 March. Okay, 30 March. So what is the condition? Now it is 25. Now when government will introduce budget in 26 next year, and this budget will be for 2027. So this budget introduced in 2026, it must be passed before the 30 March. Okay, if it not passed, then the other services, the expenditure that are already allocated, that will not be can be taken out from the consolidated fund of India. So for that they must pass before the 13th March. In case government is not able to pass before the 13th March, so what will happen? The parliament can grant the vote on account. So this vote on account will be 1/3 of budget. Okay, one third of the total grants or the budget. So the grant is there, government is asking 100 rupees. Okay, and this 100 rupees government will get after the passage of the bill. But due to some circumstances, government is not able to pass the budget before this 13 March. So what will happen? The parliament can give the vote on account. So the out of this 100 rupees, the 33.33 rupees can be given to government. Okay, to for their expenditure until the budget passes. So this is what on account. But nowadays, what is practice? Budget will be introduced in 1st of February and it will be passed before 30th March. So there is no need of vote on account. So this practice has been eliminated now. So these are the certain conditions that laid down by Constitution must be fulfilled for the budget. Okay. Then we'll move towards our questions. So it is asking which of the above this above are the charged expenditure on consolidated fund of India. So emolument allowance of the president, then salary allowance pension of the judges of Supreme Court and the High Court, then salary allowance pension of the chairperson, member of the election commission, the debt charges for which government of India is liable. So which of these are considered a charged expenditure or the charged expenditure on consolidated fund of India? Okay. So what are the charged expenditure? Emolument on allowance of president. Yes, it is a charged expenditure. So correct. Second, the salary allowance pension of the judges of Supreme Court and High Court. These are not, because the salary allowance and the pension of Supreme Court, these are the charged expenditure on consolidated fund of India. But when it comes to judge of High Court, their salary and allowance, these will be charged on consolidated fund of the state. But their pension of the High Court, this will be charged on consolidated fund of India. But when it comes to salary and allowance, this will be charged on consolidated fund of the state. So second statement is wrong. Then salary allowance pension of the chairperson and members of the election commission, this is also wrong, because there is a major controversy or the concern that rise that the salary allowance and the pensions and other expenditure of election commission, they are not charged on consolidated fund of India. So it is, what is happening? It is impacting the impartiality and neutrality of the office. Okay, election commission. So these are the conditions. These are the concerns. So, okay, so third is wrong. Then last one, the debt charged for which government of India is liable. It is also charged on consolidated fund of India. Okay, so the correct answer, only two are correct, two are wrong here. So correct option is A. Now we'll go to next question. Consider following statement about the Union budget procedure. It is asking now the procedure. So first statement says that the annual financial statement must be introduced by the finance minister. Then the finance minister present the annual financial statement on the behalf of the prime minister. The appropriation bill is introduced in Lok Sabha after the demands for grant have been discussed and voted. Then finance bill is introduced only after the appropriation bill has been passed by the Lok Sabha. So these are the certain conditions that are less known. And what is UPSC now doing? Last year they asked a question, so they might ask question on these aspects. So I brought this one. So there is annual financial statement must be introduced by the finance minister. There is no such condition that it must be introduced by the finance minister. There are other minister can also do. In fact, in 2019, that time the commerce minister Piyush Goyal, he introduced this budget annual financial statement, because before that the sitting finance minister Arun Jaitley ji, he died in office. Okay, so this was a it is not necessary that it must be finance minister, other minister also can introduce. Okay, but through by the convention, not according to constitution, but by the convention, it is introduced by the finance minister. Then finance minister present the annual financial statement on behalf of the prime minister. Now UPSC has said yes, then we may go yes, you consider it yes, but I will consider still it is wrong, because what article 112 says, president shall cause the annual financial statement laid down by the Council of Ministers. So it is President is directing. So the whoever introduce the budget, it will be behalf of the President, not by the Prime Minister. So I will consider second statement is wrong. Then the appropriation bill is introduced in Lok Sabha after demand for grants have been discussed and voted. Yes, there is a condition that appropriation bills will be introduced in Lok Sabha only after demands for grants are discussed and voted. So demand for grants, they ask for the certain expenditure, the ministry-wise expenditures, and the appropriation bill is it will take the permission of the Lok Sabha or the Parliament to make expenditure out of consolidated fund of India. Then finance bill be introduced only after appropriation bill has been passed by the Lok Sabha. Yes, this is the standard procedure that written in the rule book of the Lok Sabha, that these two statements are correct. The appropriation bill will be introduced. First, what they will introduce? They will introduce demand for grant. This demand for grant will be voted. Okay, after voting, they will introduce appropriation bill. Appropriation bill will be there. So they will vote on appropriation bill. Then they will vote for on the finance bill. So these are the in sequence when it comes to voting. But when it comes to introduction, the finance bill and the appropriation bills will be introduced along with the annual financial statement. Okay, so these will be introduced on the 1st of February itself. But when it comes to voting, they need to go in this particular sequence. Okay, so the third and fourth are correct. Correct option is D. Only 3 and 4 are correct here. Then next, consider following statement regarding the voting on demand for grants in the Parliament. Okay, first statement said demand for grants are prescribed ministry-wise. Start on, now it is correct. The demand for grants charged on consolidated fund of India are submitted to voting in the Lok Sabha. Then each demand is voted separately by the Lok Sabha. Members may move motion to reduce the demand. Okay, let me know which one is the correct here. Okay, so these are all of the correct demands for grant will be. So remember this particular statements that these all are correct. There is hardly any logic and there is no need to remember the logic. Just remember the statement. When it comes to demand for grant, it will be prescribed ministry wise. Yes, the demand for demands charged on consolidated fund of India submitted voting in Lok Sabha. Yes, Rajya Sabha has no role to vote on demand for grants. Okay, then each demand is voted separately by the Lok Sabha and members may move the motions to reduce demand. We know there are different types of motion. Token motion is there. Okay, economic motion is there. Different motions are there that can be moved. Okay, economic cut motion, policy cut motion, token cut motion. So these are the motions that can be moved during the demands put for the voting in the Lok Sabha. So the correct option is here D, that all three statements are correct here. The next question is about the appropriation bill. So it says the consider following statement regarding appropriation bill. So first, the government cannot withdraw the money from consolidated fund of India without the enactment of appropriation bill. Then no amendment to the appropriation bill can be moved in either house if alters the amount, purpose, destiny of the grant or charged expenditure. This I told in the when we discussing the conditions regarding budget that laid down in constitution. So the first that I told, the government cannot withdraw the money from consolidated fund of India without appropriation bill. Okay, yes, this is correct. So if appropriation bill is delayed, then they will take the vote on account. So they will get 1/3 of money. Okay, for the certain period. So that time, after that, when appropriation bill will pass, that time they will get all the monies. Okay. Second, also I discussed the amendment of there should not be amendment to appropriation bill which changes its amount, purpose and destiny. Okay, so this is also correct here. The correct option is here C. Both 1 and 2 are correct here. The next, consider following statement regarding the finance bill. So first statement says the finance bill will be introduced each year to give effect to Government of India's financial proposals for the upcoming financial year. Then finance bill is governed by the all constitutional condition that applies to the money bill in the parliament. Okay, next, unlike the appropriation bill, members of parliament may move amendments to the various provisions of finance bill. Okay, then constitution requires that the every finance bill must be passed by the parliament and assented by the president within the 75 days of its introduction. Okay, two statements are quite tricky here. Let me know which one is the correct. Okay, so first statement, the finance bill can be introduced each year to give effect to Government of India's financial proposal for the upcoming financial year. Okay, usually they name finance this budget as the for with the next year. So next time they will introduce, it will be introduced as a 26-27 budget for 26 financial year 26-27, because it will start from the 1st of April 2026 and it will end on 30th March 2027. Okay, so it will be for the upcoming year. Then next, finance bill is governed by the all the constitutional condition that applies to money bill in parliament. Yes, the money bills, whatever the provisions related to money bills are there, that applies to the finance bill. Okay, so this is correct. Then unlike appropriation bill, members of parliament may move amendment to various provision of finance bill. Yes, when it comes to appropriation bill, they're not allowed to move any provision or amendment to any provision, but when it comes to finance bill, they can move the amendments. So this is correct. Last one, the constitution requires that every financial bill must be passed by parliament, assented by the president within 75 days. This condition is there, but it is not laid down by the constitution. It is laid down by the provision of Tax Act 1931. This came during the British period. So this particular act given the 75 days condition, so that introduction to the assent of president, these all procedure must be completed within the 75 days, but not by the constitution. So this is last one is the wrong here. So correct is here 1, 2, 3. Here is correct. 3 of first, second, and third statements are correct here. Then we'll move towards the next one. It is match the pair. So types of grants are given, then their description. So now let me know which one is the correctly matched. Okay. So first is granted for the meeting unexpected demand for the resources of India, then needed during the current financial year when authorized fund is fall short, then granted for the specified purpose and does not form the part of current service of any financial year, then sought when the proposed expenditure on new service can be met by the reappropriation. Okay, so let me know which of this type of grant, okay, it is describes. Okay, so if you see, all of the correctly matched actually. So what an account is nothing but granted to meeting unexpected demand for resources of India. So it is kind of blank check. That blank check is given to the executives. Okay, so this is the what kind of credit. Then supplementary grant, it is the dated during the current financial year when authorized the funds fall short. So supplementary grants they need, so that is introduced. Okay, suppose the currently in budget session, this year budget that happened in February March, so they have allocated certain fund to any service. Okay, but now they found that it is not sufficient. So they need more funds. So what will happen in the monsoon session or currently winter session? They can introduce the supplementary grant to take the more funds. Okay, so this is called a supplementary grant. Then exceptional grant granted for special purpose does not form the part of the current service in financial year. So it is any unexpected demand rises, so that time it will be granted to the exceptional grant. Then last one, token grant. Okay, it is sought when the proposed expenditure on the new service can be made by the reappropriation. Reappropriation means there will not be any new grant. Okay, there will not be new grant, but it will be from one head, it will be transferred to the other head. Okay, so suppose for the tax collection, okay, then we need resources, we need human resources, okay, other infrastructure. For that, government is said 100 rupees is sufficient, so give us 100 rupees. So government has asked, but what happens, the others need rises. Okay, so there is another tax allocation is there. So this tax allocated to the state governments. So government found that we need to give more taxes. So previously government thought that we'll give them 20 rupees, but now they said that we need to give 25 rupees. So this extra 5 rupees, that what they need, this 5 rupees, if they wants to give from tax collection, if they found that only 95 rupees are sufficient here, there is no need of 100 rupees. So the remaining, this what 5 rupees they have saved, they can transfer to this one. So this is nothing but reappropriation without any new grant. So this is the nothing but token grant. So the correct is 1A, 2B, 3C and 4D. So I guess here it is. Okay, so the B becomes correct here. Next we'll go, it is about the Consolidated Fund of India. So it first statement says that all revenue received by the government of India credited to the Consolidated Fund of India. Then all legally authorized expenditure of the government of India are made from the Consolidated Fund. Then no money can be withdrawn from this fund without appropriation made by the law, by the Parliament. Okay, so when it comes to Consolidated Fund of India, and we know it is Article 266 that deals with the Consolidated Fund of India. First said that all revenue received by Government of India credit to Consolidated Fund of India. Yes, whether it is the revenue or the capital account or revenue account, whatever revenue comes, that will be credited to Consolidated Fund. Okay, apart from this, if government has raises some loan, okay, government raises loan, so it will be also credited to Consolidated Fund of India. Second, government gets some interest on the loans. Okay, if government gives loan to other country state government and they get the interest, that will be also credited to Consolidated Fund of India. Okay, apart from this, then all legally authorized expenditure of government India will be made from the Consolidated Fund of India. Yes, whatever the legally authorized expenditures are there, okay, it is will be service related or administrative related, salary allowance. Okay, so these are the legally authorized. So these all be made from the Consolidated Fund. Then last, no money can be withdrawn from the this fund without appropriation made by the Parliament. So what we need? We need appropriation bill. Okay, that we have seen. We need appropriation to bill to make the expenditure from Consolidated Fund of India. So correct answer is here D. All three are correct here. Then we'll see the next one. It is again Public Account of India. So public account says, the first statement says all money received behalf of Government of India is credited to Public Account of India. Then the public account is operated by the executive action. Withdrawal from it does not require parliamentary appropriation. Okay, and let me know which one is the correct. when it comes to the public account of India, it is also dealt by the Article 226, 266. Sorry, it also deals 266 with the Consolidated Fund of India as well as Public Account of India. So these two funds are created under Article 266. Now all the public money. What is public money? We know the Provident Fund deposit. Provident Fund deposit. This is the public money. Then we do judicial deposit. Okay, judicial deposit. What we do? Judiciary takes some deposit in case of certain conditions they apply, they take the deposit, so that time it goes to the this public account. Then remittance kind of public money, that is money transferred by the non-resident Indian from the other country to their relatives in India, so it is considered remittance. That will be also deposited in public money. And other money, public money that not makes the part of Consolidated Fund of India, this all money will be credited in public account. So okay, whatever the Kisan Patra is there, okay, Sukanya Samruddhi, this all goes to the public account of India. Then so this first statement is correct. Then public account is operative executive action. Yes, executive action, the government can that operate it without the parliamentary appropriation. Means what? There is no need of appropriation bill to make expenditure out of this public account of India. So this is the statement also correct. Correct option is here, C. Both 1 and 2 are correct here. Then next is Contingency Fund of India. So first is the Contingency Fund of India is established by the Parliament and not by the Constitution. Then the fund is placed at disposal of the Finance Minister, who can make advance from it to make the to meet unforeseen expenditure. Like the public account of India, it is operated by the executive action and require post facto approval of Parliament. Okay, so these are statements. Let me know which one are correct. Okay, so when it comes to contingency fund, it deals with Article 267 of the Constitution, deals with it authorize Parliament to establish the fund. So this is not established by Parliament, but it is established by Parliament but not by the Constitution. Constitution authorizes Parliament to establish the fund. Okay. Second, the fund is placed at disposal of Finance Minister. No, it is been disposal of the President. And behalf of President, who will hold? This will be two people will hold. First is a Revenue Secretary and Finance Secretary. Okay, Finance Secretary and Revenue Secretary will hold this. And now how much money they will hold? It is 30,000 crore. Previously it was the only 500 crore. 500 crore when before the 2021 and 21 they made it 30,000 crore. So the 30,000 crore in contingency fund behalf of President, who will hold? These two people, Revenue Secretary and the Finance Secretary. Then last one, the public account of India, it is operated by executive action but requires the post facto approval. Yes, public it will be operated by executive action but it need post facto approval. After the expenditure, it need parliamentary approval. So this statement is also correct. Correct option is D. 1, 2, 3 all are correct here. Then we'll move towards the next question. Well, this is quite generic one but holds much significance. So it is asking multifunctional role of the Indian Parliament. First statement says the primary function of the Parliament is to make law for the governance of the country. Then one of its function is to determine the executive by selecting the group that will form the government. Then no tax can be levied or expenditure incurred by the executive without approval of Parliament. Then Parliament is empowered to amend Constitution by addition, variation, repeal of the provision. So now everything we have discussed. So the primary function of the Parliament is to make law for the governance of the country. So this is primary function. This is the first function. After constitution of parliament or the Lok Sabha, what is the first function of their? To determine or the select the group of people who will form the government. So this is the first function, and this is the primary function, to make a law. Okay. Third one, we have seen, though there can be no tax that levied or expenditure incurred by the executive without approval of parliament. Yes, they must need vote on account that be voted by the only Lok Sabha, or they need appropriation bill for that purpose. Then last one, parliament is empowered to amend constitution by addition, variation and repeal. This is 2024 statement, and this is the direct line from the M. Lakshmikant. This is directly written as it is in M. Lakshmikant. So don't get here variation. So addition means what? They will add certain provision for the second amendment. They included what? Fundamental duties. Variation means what? They will change the subject matter. Okay, when the right to education came, so that time they changed the subject matter of Article 44. Okay, Article 45. So this is the variation. Repeal means Article 370. So this is the thing: addition, expiration, and repeal. So the correct option is here D. That all. Sorry, correct option is C. All four are correct here. Okay. So next, one more function. Consider following situation in the functioning of parliament. So approval of ordinances issued by the president, amendment of the constitution under Article 368, then election, impeachment of president, removal of vice president, passing the money bill. So in which of the above situations where the Lok Sabha and Raj Sabha have the equal power? So equal power. Approval of ordinances of the president, yes, they have the equal power. The both houses, the ordinance must need approval of both houses to become a law. So this is correct. Then amendment of constitution, yes, the constitution obliged parliament to follow the same procedure in the both houses, and the bill must be passed separately. So this is correct. Then election, impeachment of president, yes, both have the same equal power here to impeach the president. Then removal of vice president. Removal of vice president, when comes Raj Sabha has more power, because the removal of vice president, resolution to remove vice president must be originate in Raj Sabha, and that Raj Sabha need to pass with a special majority, and Lok Sabha only with a simple majority, that is present and voting. So that's why Raj Sabha has more power. So this not comes. And passing of money bill, when it comes to passing of money bill, we'll all know Lok Sabha has more powers, not Raj Sabha. Raj Sabha has nearly negligible power. Okay, so the fourth and fifth are wrong. 1, 2, 3 are correct. So only 3 are correct here. So when it comes to the equal power in ordinary bill, in constitutional amendment bills, okay, appointments, then removal of certain constitutional posts, then consideration of reports. So here we find the equal power. When it comes to unequal power, where we found Lok Sabha in money bill, because it must be introduced in Lok Sabha, and speaker has power to decide whether it is money bill or not, and ultimately the superseding power Lok Sabha has, because in within 40 days Raj Sabha need to give the recommendation. If they don't give recommendation, then it will be passed. Okay, it will be considered passed by the Raj Sabha. Okay, so money bill when considered, it has the unequal power. Okay, then there are the circumstances where the Raj Sabha has a unequal power when it comes to Lok Sabha. So one of the such is the the joint sitting. When it comes to joint sitting, why? Because Lok Sabha has more number, and it will be decided by the people present and voting. So the Raj Sabha will win. But when it comes to Raj Sabha, it has certain more power. First, we have seen when it comes to impeachment of vice president, then when creation of all India services, it must be introduced by the Raj Sabha. Then there is another condition, extraordinary circumstances, where the parliament can make a law on state subject. So that time the permission of Raj Sabha is mandatory. So there are the equal, unequal, and the Raj Sabha has the greater power than Lok Sabha in certain aspect. Okay, then with this we have finished the parliament. So I hope you enjoyed the session. In 3 parts, I have finished the parliament. Then next session, I will bring the parliamentary committee. So till then, stay tuned and finish the remaining sessions. Thank you very much.